Oh, hmm hmm
You see where I'm going there?
I see where you're going. Sometimes you just need some hell's bells. Just let it loose.
The power play is on.
When you're trying to set the stage, set the tempo, set the emotion for a
This
session.
is how you get going.
You just crazy times in the market. Things are all over the map. It's like update to update, depending on what gets announced and whose tariffs are going where and what's going to happen. It's interesting times. Mortgage rates are all over the place. We are going to do our best to sum up the current market situation, and we are going to get started right now. All right, I'm here with Gary. We're going to talk market update. We're going to try and talk market update as long as nothing breaks while we're having these
simplified market update.
Simplified market update as long as nothing breaks while we're having this conversation. Interesting times. Tariffs have had a impact on the stock market, and I think the expectation is inflation will go up, right? Tariffs, additional cost, tariffs should go up. Is that a fair assessment?
Yep. Yeah, I think that's the reason the market's dropping and rates are rising, right? So like, I don't want to get into like economics senior level PhD. We're just going to keep it simple on those two topics, right?
Thank you. Thank you. I appreciate that.
Yeah, because I didn't do well in that class.
Yeah.
But we do know those two things. Inflation drives up rates. Recession drives rates down. So, the last 2 days, the 10-year's been up about 17 basis points. So in terms of rate, that's probably, yesterday was a couple grand on a $400,000 loan. Today's about $1,500. So the cost of doing business is getting more expensive. And so what I think the other thing is on the tariffs is we get with this is short-term stuff. This is the market baking in tariffs.
Yep.
And there's two sides of the tariffs, right? So one is tariffs. It's going to cost a bunch more. But the whole premise around the tariffs is that it's a negotiating tool. So we don't want to pay more. And we also don't want to get charged more. So what it's doing is in situations where previous trade deals were unbalanced, right? Where we're paying a substantial amount and the partner is not, right? So we've seen twice, or in the last 2 days, where it brought countries to the table, right? So you've got the EU, which is the bulk of Europe, call it, and then Israel, Vietnam, other countries are following suit with and it's not a blanket deal. It's industrial goods, things like that. So this is still fluid, still happening. That part is in negotiation. But what on the table is a 0 for 0. So what does that mean is the costs are going down and revenue's going up.
Yep.
Right. So if we're paying 10, 15, 20% today, and they come to the table and say, hey, guess what? This is what we'll do. You charge us 0, we'll charge you 0. Well, that's the win. And that's when we're going to see it. But right now, nobody's looking at it that way. They're looking at it as a one-way deal. And that's us paying more. And that's the consumer. So,
yeah, I mean,
that's what's going on today.
I think that, I think for the purposes of real estate, I think obviously this is, inflation in the 10-year, it's having a impact on that. I mean, the 10-year was down and now it's kind of sprung back up. What will it do to home prices? I think, short term, nothing. Long term depends on kind of where the tariffs net out and which trade partner digs their heels in. I think home construction costs could go through the roof if certain countries aren't at the table. So it's a very fluid situation, to echo what you just said. It's a fluid situation. It's going to change day to day. But yeah, the idea is to get more balance with trade partners. So unfortunately, I think it's a storm everybody just has to ride out. But we are seeing rates, they haven't gone up tremendously. I mean, they've bounced around a bit, but I think, our message to our customers is be prepared, right? If you think you need to do something, you think there's a transaction coming, like whether it be a refinance or a purchase, get your ducks in a row, know what you're dealing with, know what your equity, know what the market value of your property is, so that you're ready to strike when the opportunity is right. The 3% days are over. Let's get that out of the way.
I'll put that link in the top here.
Yeah.
For the home wealth report. That's a no-brainer for everybody to have, right?
Yeah.
We've got a video on that.
Yeah, we'll have a little video that'll show you what it does. I mean, it's a report that shows up once a month in your inbox, gives you an update on the equity in your house, what a refinance would look like, what if you wanted to purchase more home, there's a slider in there saying, yeah, we need to upgrade to X dollar amount of home. It's a no-brainer tool. I get it I get mine all the time, and I'm always digging in. It's the one email that I get that I always open because it's very interesting in this market. So yeah, we'll put that in there. But, I think that tool just allows you to be prepared to take action when you need to take action. We're coming up to, what do my kids say? Like, there's not much more time in the school year. Like, we're getting near summer. Lord help us. And, that's when moves happen. So, get your ducks in a row and know that the market's going to do market things as we kind of wade through this tariff tug of war.
Yeah. Mortgage plan. And there's no crystal ball, right? Like, there's only... like I said, it's the reports and the media reports are that everything's going up because tariffs are being placed, which on the surface makes sense.
Add the percentage.
But let's say that the threat of tariffs bring people to the table and we negotiate a better deal. And that's going to also, it's going to impact our revenue to the good, and inflation will come down because now we're out revenuing our debt. Right. That's the goal. Out revenue the debt. And so
grow.
We'll see what happens. But, mortgage rates are what they are right now. They're still, staying in that kind of trend, in that kind of
generally flat. Yes, there's some EKG going on if you look at it in a short enough time period, but generally they've been pretty flat. So what happens in the coming months remains to be seen, but our advice is be prepared, know your stuff.
Mortgage plan.
Get in touch with your loan officer. I don't care if it's 3 months, 6 months out. Get ahead of it. Get pre-approved. Figure out what the timing needs to be. Get in touch with us. We're happy to help you build that mortgage plan and
absolutely
keep an eye. It allows us to be more strategic in keeping an eye on rates too, and say, hey, we're at this point. We probably want to strike.
Yeah, absolutely.
Awesome. Well, Gary, good update. We will do these as things move through this cycle. And thanks everybody for tuning in, and hang in there. It's going to be a wild ride. 2025. Here we go.
Let's go.
Thanks, everybody. Have a great day.